Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades look a bit somber. We're holding on to 19,400. Actually, we've just given up on that mark. Let's pull up the intraday chart of Nifty and see where it's trending right now. Yes, we have just given up that mark of 19,400. It's the Bank Nifty which is actually outperforming today. That's the index that's managed to hold on to the green a bit. 60 to 70 points higher as far as Bank Nifty is concerned. Gains are led by AU Small Finance Bank, which is higher by 2%. IndusInd Bank, IDFC First Bank, these are your top gainers, wherein the heavyweights, the likes of SBI and HDFC Bank, they are coming a bit under pressure. Sectorally speaking, it seems like it's pharma which is doing okay, plus you have a real estate pack which continues to build on to gains. So today it's the turn of Sobha. We have seen one day it has been turned off Godrej Properties, next day Prestige, Brigade Enterprises, and today it seems like Sobha is bouncing back with that gain of almost 6%, and even Prestige for that matter is holding up. Earnings coming in thick and fast. Adani Ports missed the expectation a smidge, but if you look at the numbers coming in for Apollo Hospitals, bang in line with expectation as far as the bottom line is concerned. 233 crore is what the company has delivered at the profit level as compared to the expectation of 230 crore. So that's the first number that we're watching out for, but continues to be very earnings specific, Aisha, because at the index level it's been pretty okay. You are also watching out for M&M because that stock is higher 4% ahead of its earnings. So let's pull up that chart as well. Maybe Street is penciling in some blockbuster numbers from this one.
Maybe M&M higher by 3.5%. This is, of course, has been one of the leaders from within the auto pack in the rally that you've seen post-COVID up until now. But PFC REC, there's no taking away from the gains that both these stocks have been making. They continue to hold higher, 5% on PFC right now. REC as well going strong by another 4%. Metropolis has shot up about almost 5%, and there's City Union Bank as well, which is looking very smart with a 3.5% move. Having said that, the market does have its fair share of losers as well today. Anisha was flagging off what's not looking good within the large caps, but even within the broader end of the market, it is fairly listless there too, because if you look at the F&O universe, it's absolutely neck and neck, 93 to 93. That's the count on the advanced decline ratio, with drags coming in for MCX, which is down 5.5%, Deepak Nitride down 2%, GNFC, Zydus Life, and Motherson as well, which is lower by about almost 2.5% or so. So is it going to be a listless Diwali? Are we going to have some dhamaka? Let's take on board our chartists as well and figure out what they're making of the trading sentiment so far. Naresh Mirani, Kunal Bothra, both in the studios this afternoon. Kunal, let me start off with you. Firstly, a word on the index. Any move or no move?
There is momentum in the markets. There is no momentum in the markets. It's absolutely flat for the indices, the Nifty and Bank Nifty both into a very tight range. Now, whether you look at it over the last 3 days or even if you look at it from an intraday basis, I think the indices are stuck into a tight 40-50 point kind of a band for itself. And the major concern, of course, something which we've been highlighting and talking about over the last couple of days is the lack of large caps, or rather the momentum in the larger cap names. So I think that's one of the major concerns for the markets. But I think on the other hand, there are a lot many new stocks which are actually making new highs for themselves on the mid caps and the small caps. So I think it's maybe the phase of a market where the Nifty is just trying and get into a zone to absorb this 600-700 point rally for itself from the 18,800 levels, and the action is getting a bit more broad-based.
Right. Though, Naresh, today you're seeing the autos see some fresh renewed vigor, right? M&M, Hero MotoCorp, Tata Motors, all going very strong. Any trading opportunity here, you think?
So in that, Mahindra and Mahindra one, and second is Hero MotoCorp. Purely, if you look at Hero MotoCorp, the stock has done nothing for a long time. Keeps going to 3,000, back to 3,250, 3,300. So setting up for a breakout there. Mahindra and Mahindra has also been sideways for quite some time. So I would go with, say, Hero MotoCorp at current levels, keep a stop loss below 3,150 and expect a move towards a fresh 52-week high, go towards 3,500 levels.
Okay, so that's the take coming in. M&M, of course, is one stock which is awaiting its earnings as well. So we'll get Shrishti shortly to talk to us about what we should expect come earnings tomorrow as well as far as M&M is concerned. But we saw a big spurt as far as stocks of Marksans Pharma is concerned. That's higher by 9%. Spark is the other one which is higher by 7%. Newland Labs is up 6%. So all of these are small cap pharma companies also, Naresh, trending higher, and add even Metropolis to that list.
So if you look at it, a lot of these names one by one are doing well, and a lot of them are making result reactions. So Marksans came out with the numbers today. That's been a positive reaction. We've seen some more positive reaction. We are seeing price action in Ajanta Pharma, Dr. Reddy's. So overall, pharma as a pack, even in the last 4 sessions, large cap pharma has done well. You have Sun Pharma coming back towards 52-week highs and all-time highs almost. And the stock was at 1200 back in 2015. So overall, pharma as a pack looks interesting. Marksans is also a 2 to 3 year breakout. So a multi-year breakout on Marksans. That's a buy on dips. So looking at pharma as a whole pack, we've seen even Granule see some price action today. So overall, I would go with Marksans in the small cap and Sun Pharma and Dr. Reddy in the large caps.
Okay. That's the
Talking
take
about
coming
the
in
pharma
on
numbers
some of the pharma pack, you were saying?
No, talk about the pharma numbers. Apollo Hospitals, more details are out. The revenue is better than expectation, and even on the EBITDA front, a sizable beat coming in of almost 40-50 crores, 627 at the EBITDA level versus 579 versus what our expectations were, and the margins also managed to beat the expectations at 12.9%, and that's the reason, Aisha, that stock is now high by 2.5%.
Oh yeah, absolutely. And you were talking about M&M. We're expecting the auto segment volume uptick of about almost 18%. In fact, even on a sequential basis, we are going to see a jump up of about 14%. That is something, of course, that the ET Now poll is penciling in for M&M. And remember, it's the supply chain as well and the execution which has actually improved at M&M's end, because remember, this was a bit of a problem area. We all know how long you had to wait for M&M cars, not quite anymore. And yes, we are expecting a strong execution of order book from them as well. The tractor segment, though, that continues to be a niggling worry. We've talked about as to how the rural growth hasn't quite come back. Then you had the monsoon factor as well at play. So we're expecting the tractor segment of volume to come in at a downtick of 22% on a sequential basis. But clearly, the street is flying high with M&M ahead of the numbers. But let's talk about Diwali, and here's a reason for investors to cheer up. Let's find out which are the stocks that can give the brightest returns this coming Samvat. Sharad, Ashesha, Vamakshi are all here to tell us what the brokerages are expecting. Vamakshi, let me start off with you.
Well, yes, let's first start off with Raymond, and it is Motilal Oswal's pick this Diwali. They've maintained a buy rating and given a target price of almost 2,600 rupees per share, and they have highlighted that Raymond in the last 2 to 3 years has strengthened its leadership team as well as restructured its group. Demerger as well as the promoter's capital infusion has in turn led to strengthening of the balance sheet as well, and the company has a whole host of brands under it, which includes Raymond, Park Avenue, Color Plus, Ethnics, and they believe that they do plan to grow it through the asset-light franchisee model. So on the back of that, Raymond is definitely on Motilal Oswal's radar. They've given a buy rating and they see an upside potential of almost 40% from the current levels. Moving on to IDFC First Bank then, this is a recommendation that has come in from Anand Rathi. They have a buy rating, target price of 114 rupees per share, which actually implies an upside potential of almost 37%. They believe that the company has undergone the first phase of transformation from an infra financier to a granular retail lender. They believe the bank could post a credit card business break-even by almost FY25, and in fact, they're expecting the bank to reach a return on equity of almost 13 to 15% and a return on asset of almost 1.4 to 1.5% by FY25. So given that, keep an eye out on IDFC First Bank. And lastly, let's also focus in on Tata Power, because that happens to be ITPI Capital's top pick. In fact, they've given it a buy rating, target price of almost 339 rupees per share, implying an upside potential from the current levels of almost 36%. Now, Tata Power, keep in mind, is India's most vertically integrated power company, and definitely it could benefit from the strong power demand. CGPL Mundra is also turning profitable, and that could resolve long pending concerns for Tata Power. Not just that, the company is aiming to move toward cleaner fuels, and they've already signed an MOU with the government of Maharashtra. So keeping in mind all of those factors, we have ITPI Capital maintaining its buy rating on Tata Power.
Okay, so those were the top recommendations from some of the brokerages. But Shar, which are the interesting ones that you were able to spot?
Well, yes, in focus we are having, of course, the two NBFCs which we'll be talking about, and Nirmal Bang's first call has come is Fusion Microfinance. The target price is roughly 820 rupees per share, indicating almost a 40% upside from the current levels. Now, of course, the important thing is this is India's second largest NBFC MFI, and also going ahead, The brokerage house is bullish, especially on the return ratios part, and they're expecting the ROA and the ROE to actually grow between 4.8% to 22% for financial year FY25. Also, apart from this, strong asset quality ratios are also there, which augurs well for the stock, and that is the first pick coming in from Nirmal Bang. The second pick, also coming from the same broking house, is 5-Star Business Finance, another NBFC, and a very different NBFC because they're actually going ahead with the average ticket loan size of less than 5 lakh rupees. Now the target price is set at roughly 1100 rupees with an upside potential of more than 40%, and also they're serving mainly in the tier 3 to tier 6 towns. Importantly, also they'll be serving the unbanked self-employed individuals, and a high earnings growth is also expected, roughly 30% CAGR over the next 2 years, and including the AUM numbers, if you look at it, that is also expected to grow 35%. So this is the second pick coming from Nirmal Bang, and the third pick is coming from Anand Rathi, and that company is Syrma SGS Tech, with a target price set of roughly 735 rupees per share and an upside potential of almost roughly 40%. It's expected that the revenue PAT expected to grow between 36 to 55% over the next 3 years as well, and the company itself is having a lot of industry tailwinds going ahead, especially in the capacity expansion part, and also foraying into newer segments such as the defense as well as the EV space. Now this is actually going to be a re-rating factor as well. So these are the 3 stock picks coming in from here.
Okay, and what about you, Asesha? What are the interesting names you have brought for us?
Yes, I'm going to start off with Dalmia Bharat, where Motilal Oswal has come out with a note where they've recommended a buy with a target price of 2,800, which indicates a nearly 35% premium from the current market price. They say company is benefiting from rising cement prices and rising cement demand, and hence they are bullish on this counter. They are anticipating nearly 11% volume growth on a CAGR basis over the period FY23 to 26, and for now they've given a 2,800 rupee target on Dalmia Bharat. Meanwhile, Birla Soft, it is IDBI Capital's high conviction buy idea with a target price of 781, indicating a premium of about 35% from the current market price. IDBI Capital says that company's ability to grow at about 3.5% on a sequential basis every quarter indicates that it is taking the right steps to turn around the business altogether. It is also betting big on artificial intelligence, and they expect revenue CAGR of about 10.5% and PAT CAGR of about 22% over the period FY23 to 26. So they've given a target price of 781 on Birla Soft. Lastly, recently listed candidate Vishnu Prakash R. Pungalia, where Nirmal Bang has recommended a buy with a target price of 262, indicating a 35% premium from the current market price. They say company is a small fish in a large pond. Large addressable market size is what it has in front of it. The company currently generates just about 1,000 crores revenue, but total addressable market stands at about 6 lakh crores. So on the back of huge potential that the company has, they've given a target price of 262, indicating a 35% premium from the current market price.
Okay, thank you all of you for highlighting what to watch out for within the mid and small cap space, particularly and what brokerages are betting on for somewhat 2080. Just taking stock of what the screen is looking like right now, while we flagged off what a Metropolis is doing, or for that matter how Apollo is reacting to its numbers right now, PFC REC as well looking very, very strong. But on that note, we're going to take a very quick break. When we come back, we'll have Sandeep Sabharwal as well join in and talk about the fundamentals of the market. Apollo Hospitals, those are the numbers that the market is digesting right now. So let me quickly take it across to Shrishti and get in the finer nuances of how the quarter has been, as the stock is now spiked up over 3%. Shrishti?
Well, great set of numbers coming in from Apollo Hospitals. We did highlight for our viewers that this time the seasonality effect will kick in, and the hospital segment as well as the pharmacy segment expected to drive the growth. But the numbers on all the parameters have come in above our estimates, beating the estimates with quite a substantial amount, wherein the revenue has seen a jump of almost 10% on a quarter-on-quarter basis. EBITDA has seen a jump of 23%, and the margins, we were expecting that at 12.2%. A little bit of uptick on a sequential basis, but the company has come up with 12.9% as their EBITDA margin, so almost a 70 basis point jump on versus our estimates is what we have seen. And lastly, onto the profit figure, that has come in almost in line to 233 crores. But apart from the numbers, the big highlight was the capex plan that the company has just announced, where they have said that they're going to be increasing their existing capacity by another 29%. In the next 3 years, they have plans to add around 2,300 beds in 8 different locations, and that will come at a cost of 3,400 crores, which the company plans to fund by a mix of internal funding as well as with additional debt that the company is looking out for. So that is the capex announcement that has been done. We were looking forward to some new additions to their existing bed capacities, because this is what we are seeing across the sector, and that's Apollo Hospital coming up with this announcement. But lastly, quickly taking you through the segmental performance, the hospital has seen a jump of double-digit 11% sequential jump. Pharmacy sales has inched up 8%. Both these have actually done better than what we were expecting, and the Apollo Diagnostic revenues has crossed the landmark of 120 crores in this quarter, as well as the health core business has grown at a 17% on a YOY basis. Across the board, we have seen great set of numbers coming in from Apollo Hospitals.
Okay, so it's an all-round beat coming in for Apollo Hospital, the capacity expanding, and that's also good news. But what about M&M, Shrishti? Looks like that the street is expecting a good number, given the fact stock is almost higher by 4%.
Well, yes, M&M is the counter that is in focus on the back of the earnings, definitely soaring in trade. And this particular, from this, we are expecting a jump of almost 5% on a quarter-on-quarter basis at 25,172 crores is the expectation. EBITDA is expected to be just flat at 3,251 crores, while the margins expected at 12.9%. But the key to watch out will be the margins, because last time also, I remember in Q1, the company did surprise on the margin front. And lastly, onto the profit figure, 2,900 crores is what we are expecting, a jump of almost 4.5%. The auto segment performance has done well in terms of volume. We have seen a jump of 14%, but that was the lagging factor this time will once again be the tractor division, which has seen a fall of 22% sequentially. So because of this mix, we are expecting the margins to see a little bit of decline on a sequential basis. But lastly, going ahead as we go across the festive season as well as elections upcoming, what is the outlook on the tractor demand? That will be the key to watch out for M&M. Back to you.
Okay, Shrishti, we'll leave it at that. That's the analysis on Apollo Hospitals and what to expect from M&M. Let me also welcome on board Sandeep Sabharwal and find out what he's making of the market right now. Sandeep, hi, afternoon. While nothing is really happening in the market for the last 2 days, how do you think the year ahead is going to look like?
I think the year ahead will be very good. I believe 2024 will be a year of good double-digit gains in the markets. 2023 was expected to be a bit dicey in a way because of the rate hike cycle and the impact that will have on valuations, etc., market sell-offs, and whether it can create some disruptions. I believe that a lot of people are now worried about higher interest rates. In my view, the time to be worried about higher interest rates is not now, it was earlier. Now we need to look forward and see what will happen as interest rates are already high, and then eventually they'll start coming down. And what that does to market valuation and overall economic outlook. And both of them which are positive.
Point taken. But Sandeep, where would you put your money to work? Will it be large cap names, the likes of Reliance? I know HDFC Bank you're not too positive on, but the other banking names? Or would it be select mid cap and small cap names which are seeing better value right now?
So any strategy has to have a combination of all kind of stocks. So on the large caps, on the banking side, ICICI Bank, Axis Bank look good to me. On the auto side, I think Maruti, M&M, Bajaj Auto all look good. On construction or capital goods, L&T looks good. I think there are a lot of companies related to economic growth on the large cap side which should do well.
Sandeep, do you think that via all this infra and construction boom which is currently happening along with the larger manufacturing theme, perhaps the best way to play that could be via banks?
Oh, banks is one way, but banks is not directly correlated so much to the capex cycle. I think you want to play capex cycle, you have to buy construction equipment companies, possibly the capital good companies, maybe cement companies at some point of time. So I think those will be better proxies, or the construction companies themselves. Those are better proxies to the investment cycle.
For NCC and any cement name that you would like to recommend?
I think cement was slightly becoming a concern as the crude prices were moving up and the impact of higher input prices could have become an issue. But then we've seen crude come back to pre-start of Israel-Gaza conflict levels. So I think cement is a decent sector, and the largest player out there is the best one to play the cement cycle. So I think Ultratech is the best way to play that.
But since you were talking about the construction theme, what about the building material in the sense of consumer durables, cables and wires, even, ceramic players, anything that comes to mind within that pack that you would want to talk about, even paint companies?
So paints, I'm not a buyer because of the impending entry of Grasim and the impact that will have on the margins of the incumbents. But on the rest of the building material space, so I think there are companies which could look interesting, but at the right valuation, many of these wire companies have gone up a lot. Although on the durable side, yes, durable side because stocks like Havels, Voltas, etc. are depressed. So they will eventually come back and do decently for investors.
What about Reliance? That continues to drag its feet today as well, just around the 2300 mark. Do you expect this consolidation and sideways move to continue at least for the, let's say, next 2 to 3 weeks?
Yeah, it seems like it should continue for some more, I would probably believe maybe in a couple of months, a couple of expiries going forward. I don't expect any major kind of a breakout coming back into these 3-4 odd larger cap names, Reliance Industries, if I can probably club the likes of HDFC Bank, Kotak Bank, etc. into the same category, because these stocks have been absolutely sideways. No evidence of a major short covering which has happened into these stocks in this last 3-4 days of the stocks being into a range. I think that's also one of the major reasons why I would probably expect that these stocks could remain a lot more sideways.
Sandeep, your view on Mama Earth or Honasa, the stock got listed not with a big gusto, it was just around that 340 level, and now it's much below the issue price already, almost $300. Would you look at this one?
Yeah, I look at it, but I won't buy it.
But that's what I meant in terms of buying it. Would you be buying it at any level, any fair value that you have put for this one?
I don't think it has any fair value. I think it operates in a space where it has no, let's say, unique capabilities. It's a brand built up by spending huge on advertisement and promotion, which are, I think, 35% of their total expenditure. It's an unsustainable business model. So let's see how it goes. Hopefully it does well for the shareholders.
Yeah, I mean, one would think, Sandeep, that cases like these would be more takeover targets eventually.
No, but then whoever takes over, what will they do with a company where the entire sales focus has been to spend 35 to 37% on promotion advertisement, and the average promotion plus advertisement expenditure of the medium to large FMCG companies are between 8 to 12%. So how do you make this a profitable venture? Because as soon as you cut down those spending, the sales will just die away.
The big movers of last few weeks are actually seeing some profit booking today. Naresh, case in point being BSE, that's down about 5%. Kalyan Jewellers has come off the highest point of the trading session and the record high levels at that, down about 4%. And then some of these manufacturing names, Endurance, Amber, etc. Do you think there's a bit of a reversal here?
So a lot of these names, say BSE for example, has gone up from 500 back in March to 2000 plus levels. So that's been a 4x move. So even a 15-20% downtick from the highs would be normal. It's just a 5% downtick as of now. So going back to 1700, 1800 would be a normal case. So I would expect some more correction and then maybe a pause. The trend is strong, but a correction of 15-20% is normal after such a move. Same is the case with other names which have done really well over the last 3-6 months. So we are seeing some bit of topping in overrun names.
Okay, that's the take coming in on some of these high-flying stocks. In the meantime, it continues to be an M&M day, really. In fact, not just M&M, it continues to also be Hero MotoCorp, Tata Motors, Maruti as well is scaling higher. In fact, Sandeep, in the year gone by, and I'm only talking somewhat to somewhat, you know, you've seen a re-emergence or renewed vigor in the likes of a Bajaj Auto, Maruti for that matter as well, in terms of the kind of MCAP it's garnered. Quite a few of these names have, you know, sort of joined into the auto rally. But what do you buy afresh or what do you add fresh positions to within autos?
I think we need to see how the sales pan out in the festival season, etc., and near-term impact, because there are a lot of news flows about high inventory levels, although the companies sound bullish. So that's something we need to see. But overall, directionally, I think the outlook is good because interest rates have stabilized and input prices have stabilized to moderated. So we'll see continuous possible improvement in margins and profitability for many of these companies. So I would be positive on like Tata Motors. We own Mahindra Mahindra, and we own Maruti also. Bajaj Auto, I would have liked to own, but we could never buy, and then it never corrected. So, but I think that will also do well.
Okay, point taken. So those were that was a recommendation from the auto pack. Let's take a look at some of the other buzzers as well. Aegis Logistics is higher by 7%. You also have JP Power, which continues to be very volatile for itself. BSF India, which is a result candidate. You also have Triveni Turbine, etc., and Welspun Corp doing okay as well. And on the losing side, it's MTAR Technologies, KRBL, and Mishra Dhatu Nigam, which are down. Let's take the closing trades from our chartists as well. Naresh, what's the closing trade?
So that's a buy on City Union Bank. The stock has finally shown some bit of resilience and relative outperformance after a really long time. Finally, the stock has crossed about that 140, 145 mark. So looking at it as a stock which could surprise on the upside in the short term.
What about you, Kunal?
So I'll go with real estate stocks. DLF is a strong candidate of a breakout, trading about 600 levels. I think till the time the stock is trading at the 600 plus mark, looks attractive for a short-term setup of at least a 5% upside.
Right. Sandeep, where within realty are you still comfortable after the run-up that's already taken place in the past 1 year?
Yeah, run-up has been very strong. So it's tough to find value now, actually, if you ask me frankly. So for people who are holding, I think there's no reason to sell also. But for new entry, new buying, we need better prices because these stocks are just shot up too much.
Yes, they have across the board pretty much. But Sandeep, always good chatting with you. Thanks for taking the time out, and we'll see you on Sunday on Diwali Day. We'll take a very quick break on that note. Still doing nothing really, absolutely flat. Let's hope for a better last half hour.
Welcome back. Well, in the last few minutes, we've got numbers from Ashok Leyland. Look like a bit lower than what Street was expecting, while for Bosch, there has been a big jump up as far as the profitability is concerned. And I think that's because of the one-time gain that has been accounted for, because the revenue is just up around 12%, but the profitability has become almost 3x. But the other numbers that we got over the last 1 hour was the Rani Ports. It was a little lower than expectation, but let's listen in to what the CEO, Karan Adani, has to say about the company's performance and the road forward.
I'm pleased to announce APSEZ has delivered its strongest ever half-yearly performance during H1 of FY24. I'll provide some highlights on the H1 gone by. Firstly, on the port business performance, cargo volumes have jumped by 14% year-on-year to reach 203 million metric tons. APSEZ crossed a significant milestone of handling 200 million metric ton of cargo in just 181 days, surpassing its previous record of 212 days. 8 of our ports recorded their highest ever half-yearly cargo volumes. Mundra Port alone handled 3.6 million TEUs during H1, which is 15% higher than its closest competition. Given our focus on improving operational efficiencies, port EBITDA margins recorded an increase of 220 basis points year-on-year to 72%. We are on track to commission India's largest transshipment port at Vizhinjam by the end of FY24. The construction work at our WCT port in Colombo, Sri Lanka, is progressing well. The port has also received funding commitment of USD 553 million from the US International Development Finance Corporation. Talking about the logistics business, the logistics vertical recorded its highest ever rail and GPWS volume during the first half of FY24. Rail volumes increased by 25% year-on-year to 0.3 million TEUs, while GPWIS volumes increased by 42% year-on-year to 8.9 million metric tons. During H1 of FY24, APSEZ added 11 trains, Loni ICD, and 2 warehouses to its portfolio. Now let me discuss the financials. Consolidated operating revenue for 6 months ending September 23 increased by 26% year-on-year to reach rupees 12,894 crores. Whereas for Q2, the revenue increased by 28% year-on-year to reach rupees 6,646 crores. Consolidated EBITDA, including Forex for 6 months ending September 23, increased by 49% year-on-year to reach rupees 7,429 crores, whereas for Q2, the EBITDA increased by 27% year-on-year to reach rupees 3,664 crores. The profit after tax for 6 months increased by 33% year-on-year to reach rupees 3,881 crores, whereas the Q2 PAT is at rupees 1,762 crores. The profit got reduced by rupees 455 crores due to the MAT write-off corresponding to the past years. This write-off has happened as APSEZ, based on estimated future profits, has elected to switch to the new tax regime for one of its subsidiaries, that is Adani Krishnapatnam Port Limited.
Okay, that's Karan Adani highlighting how Adani Port's quarter has been for them. Currently, the stock lower by about 1.5%, although year to date it's seen some decent gains. Having said that, let's just take a look at the market, because that's really doing nothing, just a little bit of an inch lower. So we're sub that 19,400 mark, but not a material move regardless. Rajesh Ali though joins in to talk about what he's making is going to do well in the year ahead. Rajesh, help us understand, some ideas that you may be working with, which you think will give good returns in the Samvat ahead.
Yeah, good afternoon. So we are having the 6 picks for the current this Samvat, and I'll start with the one. So first one is the Birla stock. So this is the IT company. Even though when the overall the IT stories are not that great, we believe this Birla stock will be the one pick where the turnaround story is lined up. And in the recent trades, even the Birla stock has given a good amount of breakout. It is like at the new CEO which has joined, I think he's going to do some great job. And they are turning all their employees into artificial intelligence. The story looked quite promising, so we are extremely bullish on the Birla stock. So and we are targeting 781 as a target in the next 12-15 months, so which would be potentially 36% from the current level. The second bet is on the Kajaria Ceramic. So again, their dealership network is quite good, strong, and they are expected to give good revenue over the next couple of years. So we have a very strong recommendations on the Khajara ceramic. We are looking somewhere 27% upside from the current level for the target price of 1608. The third counter is the Lodha. So we all know that the realty stocks are in the boom right now. Lodha specifically because we believe their pre-sales number are quite good. They already achieved 20% of what they have been talking over the last couple of weeks. So the numbers are quite good. So looking at the estimated pre-sales number and what the projects they have, I think we are of the opinion that Lodha will be the one of the outperformer in the realty space. Somewhere we are betting for another 32% from the current level for the price target of 1061. And the fourth bet is on the Narayana Hrudayalaya. So this is the again the hospitality space. They have a large amount of beds, and they are going to do a good amount of sales in coming years. Basically, they have a Bangalore and Kolkata is something which they have in a pipeline. So that sales number is going to improve is what we believe. So we have it. We recommend this at the current price for a target of 1238, which would be roughly 24% from the current level. Fifth one is the Tata Power. So basically, Tata Power, it's more of a technical call. The reason is if you look at the monthly chart pattern, it's giving a bullish flag kind of a pattern breakout. So it's pretty, we are convinced that this should see a good upside, and 43% is the target, or somewhere close to 339. So that's a bet for the Tata Power. And the last would be the Union Bank. We are entirely bullish on the PSU bank space, but this Union Bank specifically, we believe there can be some good turnaround stories. In the last con call, we heard that close to 9,000 crores of NPAs will be recovered in the next 2 quarters. So that would really add a very good value to the stock. We are targeting 138 as a target price, which would be somewhere to 34% from the current level. So this would be the sixth pick which we are betting for the current Diwali pick.
Thanks so much for joining us with those top recommendations for this Samba 2080. Those are the 6 recommendations coming in. Before we head into break, just quickly pull up the chart of ABB India. The numbers were just reported and it looks like it's a beat versus the expectation, and that's why we are seeing a bit of a move on that one. We'll track it when we come back after this very short break.
Back with closing trades right here, Niti. Now, a little bit of a drift down, nothing material really. We've not done anything besides, of course, autos, which continue to gain ground. You've got a PFC REC still holding out. Apollo Hospitals, Metropolis, of course, has put on some more weight. That stock is holding higher as we speak right now. But besides that, you've not seen much of a move at an index level. Even within the broader market, you're not really doing a whole lot, because there as well, we're lying absolutely flat as we speak right now. It's a status quo really when it comes to that particular segment as well. But we've got Pawan Parekh as well joining in right now from Renaissance Investment Managers to chat about what his take is on the markets. Pawan, hi, good to have you on the show. Thanks for joining in. Pawan, there's this whole debate about whether the small and mid caps are now getting frothy, whether the next lap of the move is going to come in from the large caps. Do you now need to turn cautious when it comes to the broader end of the market? What's your take?
No, I completely agree with that argument. In fact, when I was there last time on the channel, I did highlight that, I could see a lot of froth in low quality mid cap, small cap stocks, given the rally that's happened over the last 4-5 months. And if you take slightly longer periods, say about a year or so at the index level, while companies have reported decent set of numbers, at the index level, large Nifty index hasn't delivered anything. So very clearly, there is some sort of fraud getting built up into mid cap, small cap names, and one has to be really cautious about it at this point in time.
Okay. So since you are recommending turning cautious, what is it that you're recommending bullish bias towards and across market cap categories?
So what we've been maintaining over the last about 1-2 months is that there are stocks in perhaps every sector which don't deserve the valuation that they're commanding as of now. Hence, it's very important to be very stock specific. Take the case in point of the entire tech sector. Some companies have delivered decent numbers, some have not delivered so very great numbers. But given the rally over the last, say, 3 months or so, perhaps every tech stocks have done generally well, right? So tech is one example, banking is one example, auto is one example. So I think there are examples across sectors wherein stocks across the board have done well, but earnings haven't followed the same trajectory. And it's very important to be very stock specific in all the sectors that one wants to take position into.
Okay, so that's a take coming in. You need to be very specific in terms of your stock picking at this point of time. But what about pharma, Pawan? Which vertical within pharma are you liking right now?
So we're essentially, focus more on companies with US exposure as of now, very clearly. I think across the board, I think the data is very loud and clear that there is some sort of a drug shortage in US. The pricing erosion is no longer there. In fact, some of the companies anecdotally have got clearances of their factory. So very clearly, the cycle which was not in favor of these companies for last so many quarters and years seems to be turning in their favor. And I think it's very clearly visible in the results of some of the pharma companies that they've declared in last about 10 days or so. On the other hand, if you see, typically Q2 is a acute heavy quarter, and given that acute season hasn't been very great, so domestic growth for across all companies has been in the range of 5 to 7% on an organic basis. And typically, when these companies which have got US exposure, they deliver some very strong growth. Safe to believe that profit growth will be significantly higher than the revenue growth. So we are very clearly placed on companies which got international exposure as far as pharma sector is concerned.
Right. Okay. To stay with us, we'll come back to you. But here's an 18-hour exclusive, and we've got Sanish Sharma, the founder and managing partner at Kedara Capital, discussing factors influencing India's growth. He also chatted with my colleague Anurag Joshi about, the bullish sectors that he's currently seeing.
If you look at it globally, there has been a slowdown, and we are well aware of that. There is a little bit of that rub-off that is happening in India. Having said that, if you look at where India is today, it's in a very strong position. This is driven off strong fundamentals, where the underlying performance of the economy is good. You see a geopolitical position where India is in a very strong position and the youngest population, and which is leading to a very strong consuming class. This is leading to India being in a strong position. Yes, has there been a slowdown? Of course, there's been a slowdown compared to what it was over the last couple of years. But I personally believe that there is going to be a lot of growth in the economy. You'll see PE community especially. VC to a lesser extent, given the slowdown is more marked there. PE community will continue to invest more aggressively. And you will find a lot of the strategics and global corporation begin to invest more aggressively in India. And I think that's what's going to lead to a lot of growth in the country. One other small thing I wanted to highlight, which I think smart investors have always done, is this whole fundamental fact of counter-cyclicality. If you look at what Warren Buffett says, he says, be greedy when world is fearful. Be fearful when world is greedy. So I think a combination of that is what we have always been very careful of. That we basically,
Yeah. And do you expect India's resilience, and India's being kind of an outlier in this aspect among the major global economies, to help correct the slide?
I would say my personal view is there is a reason why India is now a topic of discussion in every global boardroom. The resilience of the economy, the performance of the economy is visible to everybody. If you look at the central government balance sheet, stronger than than it's ever been. If you look at the corporate balance sheets, a lot of cleanup has happened. A lot of people have paid back a lot of their debts. They're healthier than they've ever been. That's why they're investing a lot more than they have ever invested. If you look at it, basically, the individual balance sheets, that's never been a challenge in India. People have always invested and borrowed much less in India. And then the last thing is the bank balance sheets, probably stronger than ever before. Every bank is giving, I would say, record profits across the board. So I feel India is in a very good position. We feel very strongly about that position. That's why you see in the last 1 year, we've invested in 6 companies, right? From doing an incremental investment in Lenskart, ASG, Oasis, Avance, Oliva, Perfios, K12. We've invested in a bunch of these companies because we believe this is a great time to start investing in India and be more aggressive on India. So that's
6 companies. So what's the outlook on deal-making activity in 2024? And if you have to pick up, I won't ask you about 3 companies, but I can ask you about 3 sectors.
Sure.
which will be your favorites in 2024?
So I would say, if you look at the deal activity, it's a very, very important question. And I think everybody has been talking about it, thinking about it. From a deal activity perspective, see, public markets are already open. If you remember, they were closed till 6 months back. There are more IPOs happening, record IPOs happening, IPOs are doing very well. So public markets are already open. Private equity is definitely started using more traction. People are being careful, yes, people are being careful. But I do believe that the traction on private equity, investment in private equity for good companies. So there's a big flight to quality in IPOs and in private equity.
Yeah.
VC is probably a little bit slower, and rightly so. I think it's good for the industry to slow down. There was just too much capital in that industry. It'll help a little bit of slowdown. Companies go back and focus on profitability.
Come today. That's about how deal making is likely to pan out in 2024. In the meantime, not much is actually happening in the equity markets for now. It looks like people have already gone for their Diwali holidays. Volumes have been on the lower side throughout this week, and today as well seems to be no different, at least at the index level. In fact, Bank Nifty too has given up most of its gains, and it's actually difficult to pinpoint stocks which are managing to outperform by a huge margin. Nonetheless, Pawan, within the real estate pack as well, where does the preference lie, or is it getting a bit more toppish for you now?
No, I think real estate continues to remain very exciting, and in fact, we are playing that entire real estate and building materials theme with stocks across sectors. So we own cement companies, we own building material companies, we own select real estate stocks.
I think we'll snap that line with you. Thank you so much, actually, Pawan, for making time and speaking with us. We'll let you go on that note, given the fact that we're just 5 minutes towards the close of the trading session. But at the index level, Naresh, for the Bank Nifty, we've again given up the gains. What do you make of it?
So the problem is in the Bank Nifty, if you look at it, the two largest weights are HDFC Bank and ICICI Bank. Both are going nowhere. So if you pick up HDFC Bank, it was at 1485 maybe a month back, maybe 3 months back, maybe a year back also, even before the merger. So till the time we don't get any clear leader in the Bank Nifty, we would continue to struggle around the same area for some time. So overall, expecting sideways move to continue on the Bank Nifty.
Okay, so that was about the Bank Nifty space. Meantime, let me take stock of some of the stocks which are actually under pressure right now. 52-week lows, there's just two names actually. Campus Footwear is one of them, and that actually is at an all-time low. And the other losers are KRBL, MCX is down. You also have HEG, GE Shipping as some of the names on the back foot. But let's take the BTSC ideas. Kunal, do you have some buy today, sell tomorrow ideas, or sell today, buy tomorrow?
Well, buy today, sell tomorrow ideas. So BTST trades. The first one is actually on Coal India, which after quite some time I think is making a comeback of sorts. The stock breaking past about 320 levels today. So would suggest a buy on Coal India, targets of 335. Stop loss could be kept at 318. And Vatek Wabag is a stock which has managed to give a swing breakout more on the weekly and the monthly charts. The stock was trading with a fair kind of a negative bias over the last few months, but I think this seems to be now a very strong comeback, breaking past about 550 levels. So would suggest a buy with 575 as a target, stop loss at 535.
Right. Okay, Naresh, what's on your list?
So first is a buy on City Union Bank. The stock has given a breakout, relative strength today when the Bank Nifty is struggling. The stock has given a breakout, could head up higher in the short term. Stop loss at 142, target price of 150. Second is a buy on Power Grid, a defensive stock which continues to slowly and steadily leg up. A new 52-week high and an all-time high for the stock. So a small flag breakout on cards here. Stop loss at 207 and a target price of 214.
Okay, in fact, 3 minutes left for the trading session to end. But Aisha, it was an interesting chat that you had with Manish Shokhani, right? Talking about how, of course, bleed blue is the motto, but it was what, HDFC Bank or Reliance, which was the one that
HDFC Bank.
Yes, that was the one he thought.
That's because he's betting big on banks, and he's saying that all the infrastructure, construction, manufacturing boom that you're currently seeing, that can all be played via banks. And within banks, this entire churn is going to continue to take place. But he's saying, safe to say that HDFC Bank will soon have its light in the day. But let's hear out a slice of that conversation, in fact.
At different points, different sectors will show you, because we go for rate of change. But if you look through the whole cycle, who is going to be the steady eddy, who will do a 20% type compounding for you, and if multiples re-rate, That's really what you want to bet on.
Capture, yeah.
That I'm starting on a lower multiple base and I'm getting the return
But
on
that's not
equity
IT.
takeoff.
What I was
So
pertaining to
IT,
sectors
IT,
like
I think
IT.
is in a a structural shift because of what's happened with Chat GPT and the others. And the nimble guys will probably make it, but I mean, if honestly, if you can buy platform companies, you're not going to go to now the service companies. If you understand what I mean.
Yeah.
They're still great companies with great cash flows, but I think there's some business remodeling which needs to be done there. Similarly, I've been vocal about pharmaceuticals that in the world, if over the next 5 or 10 years you're going to go more and more towards biology and CRISPR technologies, then the old chemistry-based bomb the illness and get rid of it. That's going to change. So the old stalwarts in IT and pharma, which led our export thrust, I think morph towards IT hardware with the EMS guys.
Okay, so of course it's HDFC Bank, which could be the Virat Kohli of 2024. That's the big headline for me. But just 1 minute left for the trading session. So let's start wrapping up the day. 19,400 is what we have given up by the end of the trading session. Looks like we'll end just around that red territory. The Sensex 2 just down about 0.2%. Advanced decline ratio 2 is favoring the declines. Actually, many sectors are going home in the red today, whether it's the FMCG pack or IT or even the PSU banking space. All of those saw some profit booking today. Real estate continues to be that pillar of strength for the market right now. So Sobha, Prestige, Oberoi Realty, these were the top gainers there. And auto, led by that big gain that we saw in M&M ahead of its earnings, was also something that deserves mention, 4.5% higher. You also had Hero MotoCorp, Tata Motors being as some of your other top gainers. Metropolis from the pharma pack, and even names like Granules, Apollo Hospitals, the result reaction, these were the positive names. And City Union Bank as well as PFC were some of the other gainers. On the losing side, Aisha, MCX, Nalco, Motherson Sumi, Deepak Nitrite, pretty much the result reactions that were beleaguered in the trading session.
Even Tata Power, that also closed in at the session lows, about a 2.6% kind of drag. There was Adani Enterprises, Adani Ports as well, which saw a bit of correction. And then, of course, blue chips like ONGC, Reliance, TCS, Infosys, they didn't participate. In fact, were drags. The entire tech sector was, in fact. SBI was flat, ITC as well flat, and HDFC Bank as well did nothing really. It's really been a nothing sort of day, so let's only hope for some of the sparkle to gather momentum maybe tomorrow. But we'll see you again with all the market action.